Today's episode is sponsored by
a new online bookstore, indielector.store, is unlike any other. Indielector.store offers great prices from top indie authors and supports authors at the same time by paying them more for their books. Indielector.store has a readers club that gives you free books and special deals. Watch the indielector.store continue to grow before it opens in the fall of 2019 at indielector.store.
And now, on to the show.
I'm Phillip Washington. The name of my book is Retirement Investing 101, a step-by-step process for building and managing a retirement portfolio. And my book is broken into 3 parts. The first part is breaking down myths that people have about investing as wrong. The second part is literally my investing process that I use to manage my money and my clients' money. And the third part is how to think about investing, which is the most important part.
Book lovers unite! I'm Demetrius Jackson, and you're listening to the Chapter 1 podcast. The greatest stories ever written all begin with Chapter 1. In each episode, our guest authors will share their first chapters with you. Okay, so you've been putting some money aside for a little bit, and maybe you've been thinking about investing. Well, this is the episode for you. Today, I'm going to be speaking with Phillip Washington, who's a financial advisor who does just that. Help people to make smart financial decisions and, of course, build towards retirement. And today he's going to be speaking with us about his new book entitled Retirement Investing 101, a step-by-step process for building and managing a retirement portfolio. And no, this is not going to be some highbrow, over your head finance discussion with numbers and equations and all that other confusing stuff. And this is not going to be a conversation that's overly simplified. Phillip has been working in finance for a long time, and he has some pretty solid tips that he'll be sharing with us. And it starts right now.
I'm not going to give you an analogy of the benefits of just starting small and building up over time. You already know that. If you really wanted to invest, all it would take is 1 or 2 phone calls to a bank, mutual fund company, financial advisor, or online investment broker to ask if you can start an investment account with whatever you currently can invest right now. My guess is they would say, sure, let's get you set up. This is less of a myth and more of just an excuse not to start. Here's one of my favorite Bible verses that I apply to money. If you're faithful in little things, you'll be faithful in large ones. But if you're dishonest with little things, you won't be honest with greater responsibilities. Luke 16:10. Translation, if you can't put something away with the money you make now, making more money won't solve your problem. Investing myth number 2. I already have a financial advisor. Most people I've talked to about investing that have a quote-unquote financial advisor are working with a sales representative, not an actual financial advisor. I'm not saying sales representatives are bad people. I was one for the first half of my career before I fully understood the difference myself. I just want to educate investors on the difference because most people don't know there is a difference. So what's the difference? Sales representative. A sales representative is someone who gets paid to sell products. Some products and companies pay them more. Some products and companies pay them less. They are a representative of an investment broker. Many sales representatives are restricted to selling only the products their investment broker allows them to sell. There's no incentive to recommend some of the lower cost products like low cost index funds and exchange traded funds because they don't receive money for recommending products that don't pay commission. They are paid most of their money up front for the products they sell and may get some trailing fees as long as you keep the product. Financial advisor. Financial advisors charge a fee for investment advice. The fee charge is typically based on the account size, not which product he or she recommends. The financial advisor works for you, not the investment broker. The financial advisor recommends the investment options they believe will best help you reach your goals without worrying about broker limitations and big commission temptations. Which would you prefer? Here are some of the reasons I've heard from investors who say, they prefer financial advisors over sales representatives. Financial products are complex. I don't have time to read through stacks of disclosures to know all the fees and commissions I'm being charged. I'm more comfortable paying someone to do that for me. I want objective advice, not advice that could be influenced by which company or product pays my quote-unquote advisor the most. What I pay my financial advisor is upfront and transparent. No hidden fees or costs. Some financial professionals are financial advisors and sales representatives at the same time, meaning they can sell investment products and get paid a fee. This is the main reason most people don't know the difference. Their quote-unquote financial advisor's card says financial advisor because they technically can charge a fee for advice. However, when I look at the portfolio they recommend to the investor I'm talking to, it's mostly, if not all, commission-based products that were sold. When I break it down and explain it to people, many of them say they prefer to work with a financial advisor over a sales representative. Some, out of loyalty and not wanting to rock the boat, keep their sales representative. That's okay too. I just want investors to understand the difference and make their own well-informed decisions.
How do I find the right keywords for my book? Or how do I even start writing a book in the first place? These questions and more are answered in the new Chapter 1 podcast, Ask Me Anything video series, available on YouTube. In these videos, I'm going to be answering your literary questions about media, marketing, publishing, and technology. So think about anything you've ever wanted to know about writing, publishing, and promoting a book, and then send those questions to info@ch1podcast.com. To access these videos, just click the link in the show notes or search for Chapter 1 Podcast on YouTube. All right, so Phillip, first thing I notice is you're kind of a young guy. Yeah, you're talking about retirement investing. How do you address those people who feel that maybe you're too young to know anything about retirement?
You know what, man? That thought never even crosses my mind. It used to cross my mind in year one, but I'm 12 years doing this, so it didn't cross my mind. Maybe it's that maybe I exude confidence, or I wrote a book, or they hear my podcast, or I got strongly referred, or they've seen many of the videos I put out on Facebook, LinkedIn, and Instagram, or just they met me and they asked me questions, and I'm super knowledgeable on what I do. If it's ever been an issue, I've not noticed it.
That's awesome. And I think it's your experience that makes the book so easy to read. Who are you specifically targeting? Because while it's a simple conversational tone, you present a lot of tips that I think even seasoned investors can benefit from.
So the target for my book was profile of my client, which is between the ages of 30 and 55. And so that's who I had in mind as I was writing the book. But you would be shocked at how many people with $1 million accounts don't really know the basics. So when I wrote it, I was like, hey, look, let me write this in a way where even the beginning investor can understand it, because the person with $1 million is too, prideful or don't want to say that they know what they're talking about, and so a lot of times they haven't asked some of the basic questions of their investment advisor and how things work. So I was like, hey, look, I'm writing it for people who have some money, but I want to write it to the person who doesn't have any money, can explain it too. And then the conversational tone. So I had a blog for 3 years, and I started writing the blog because I had a 4-year finance degree, and I've been in the business for 7, 8 years, 9 years. And I knew my stuff, but now I had to translate it into regular people talk. And so the blog kind of helped me break things down, clarify my thoughts, learn to speak in non-nerd talk. It was how I got to write it so simply.
Yeah, absolutely. What are some of the common questions that you receive from people who've just started investing or who are still on the fence about investing?
The most common questions are, where should I invest? And it's actually pretty specific. I don't have a 401k, Phillip, so where do I invest for retirement? Or it might be, which should I invest in first, a traditional IRA or Roth IRA? What should I do with my 401k? Is it worth it? What's the best investment books? That's a big one. Where do I start with my knowledge? What can I do with $100 a month, $500 a month? Yeah, it's a lot of individual questions. Somebody was asking me, Phillip, if you do your podcast every day, won't you run out of content? I was like, no, like never. I can do it every single day and have a new question every single day, because 12 years of doing this, I've gotten a question that was probably new every single day. Now I'm just recording it.
Well, plus the economy changes every year, every day even.
Every day, right? There's new challenges, and there's nothing new under the sun. So the principles that I answer from are all the same. It's just wrapping those principles around what's going on currently.
Yeah, exactly. Your book is basically broken down into 3 parts. So let's talk about those parts one by one. The first being the 10 biggest investment myths, which you shared a portion with us. Do you just cringe when people you talk to just start mentioning those myths back to you?
No, I don't cringe, because I have empathy that most of us just didn't grow up talking about money. I know I didn't. And so I less cringe, and I more try to get those myths out from in their head, because most of the time they don't bring them up. It's in their head, and they are intimidated or embarrassed to bring it up. So I try to do my best to bring it up and address it up front, because a lot of times they're not going to tell me. And so I also listen for things like, they may say something like, hey, I want to invest, but I don't want to lose money. So I want to go, real conservative. And so if it's somebody who's 35 or 40 telling me that, then I know the myth that they believe is that stocks are risky, right? Mm-hmm. So I know, all right, I gotta address that. So they rarely tell me like up front, but it's more listening for cues and saying, all right, what do I need to make sure I address based on some irrational fear? And by the way, it's also not their fault, because if you turn on the news or read a magazine, their economics is to get to sell advertisers, because people are eyeballing their pages or their website or the TV channels. And so they're gonna sell a bunch of BS that's worthless, because they want people looking at it. Mm-hmm. So it's the media's fault too, which is where a lot of folks get their news, which is why I created the podcast, because I wanted to create an anti-CNBC.
Yeah. You've mentioned your podcast a couple of times. Can you tell us about it?
Yeah. So the name of it is hashtag Ask Phillip. It's on every platform, Apple, Google Play, whatever platform you have. And it's a daily Q&A, 1 to 5 minutes, where it's basically a question that I either receive from somebody emailing me or direct messaging me on Instagram, or asked in my Facebook group, or asked in a client asked in a meeting, or somebody asked at a seminar that I gave. And it's a 1 to 4 minute me answering the question in simple language, and I do it daily, Monday through Friday. Yeah, I'm just trying to put out as much content as I can to combat the bad stuff or the wrong stuff.
Yeah. And I think you hit the nail on the head when you were talking about the media and the internet to an extent, because you got to get those clicks.
Gotta get those clicks, man. It's crazy. You can understand how the temptation can be there to, do those cheap tricks to get the eyeballs. But I'm just like, hey, you know what? Over the long term, tried and true wins. Truth wins, principles wins. And I'm not after everybody, but I want to help who's seeking truth.
Yeah, there's so much information out there. It really is about finding your audience, and you find your audience by being genuine and by making sure that what you're putting out there is genuine.
Yes, sir.
So the second part of your book talks about portfolio building, and you mentioned not needing a lot of money to start off. But is there like maybe an ideal amount that a person would need to start with?
No, I mean, there's an app called Acorn or Stash that will allow you to invest your spare change into a portfolio. So no, I mean, I think the most important part is just to start, right? A lot of people believe in the secret or the Think and Grow Rich stuff, where, you just think, you read, you believe, you focus, you visualize. And I think it's important, but I think the best way to change your mindset is just to do, right? So if you say, hey, I want to be an investor, like right there, stop, go download a app or something, open an account, and start investing. And now you're an investor, and it'll change the way you think. And then you do all the extra stuff too. But once you're an investor, the way you think different, the way you take in information will be different. You'll be an investor, and you'll increase your learning curve, because you are an investor versus waiting to be an investor or hoping to be an investor. It's kind of like, have you ever been to the pool on a really hot day, mm-hmm. and the pool is cold, and you like get over there and you dip your toe in the water, and then you think about getting in, but you don't want to be super cold and whatever. Like the best thing to do is just jump in, just get in the pool.
Yeah,
It'll work itself out.
absolutely. Acorn. I haven't heard of Acorn before, so I'll have to look into them. That's a really great concept. So you're probably in support of those micro investment sites like what ShareBuilder used to be before Capital One took it over, where you can invest a dollar amount as opposed to a share.
Yeah, and I don't endorse either of them. I just endorse the idea of doing something. Like if your holdback is, I think I got to have a lot of money to talk to an advisor or something, then go somewhere where it doesn't, and then start learning.
Yeah.
Because I haven't personally used any of them. I just know they'll let you do it with a little bit of money. The portfolios may or may not be good. I don't know. I haven't looked into it. I just want people to do, right? Especially, what do you got to lose investing $1, $5? Most people blow that. So I'm just like, we all, because I have student loans still, we all blew a bunch of money on worthless college. I say worthless. We all overpaid for the education that we got. So I'm like, hey man, even if you in your education of investing mess up a few $100 to a few $1,000, like that's the cost of learning. That's tuition.
Yeah, ain't that the truth, man? Seriously. In your book, you do advise that investing in stocks over bonds and currency is a good thing. I'm guessing that's because over the years, stocks tend to perform better. Why do you think that is?
Yeah, and I'll get away from the numbers and just get back to logic, right? So for forever, human beings have always traded goods and services, right? Whether we traded in dollars or seashells or traded corn for wheat or whatever. And so what stocks are, getting to the basics, are you own businesses. And so if you say, all right, businesses have been around for a long time and people have always bought goods and services from businesses. Well, if you own the businesses, it doesn't matter what we trade in 10 years from now, 20 years from now, 30 years from now. You get the upside, right? Because the business is going to grow more than the currency, because, the more trading that goes on, that means there's more products being sold. And currency over the long term, net is not going to grow higher than inflation, right? Because inflation, one of the factors is how much money is in the system or currency, which I don't want to go too geek on it. But but the point is, if you own the business, then you participate in the upside of us evolving and selling more stuff net over time. And the currency doing well or not doing well doesn't really impact that. We can trade in Bitcoin or seashells 20 years from now. Somebody's going to trade that for some Coke, not the drug. I'm talking about the drink. And same thing with real estate. People talk about real estate, and I'm like, hey, real estate's cool. It's a good diversifier. But when you look at it with no debt, real estate over the long term is going to also keep pace with the cost of inflation, because you can't have our living grow higher than our salary for too long, because that gets things out of whack. And so same process. But if you own the businesses that are doing well and selling stuff, then you get the real estate the businesses own. You participate in us, the businesses, hiring people who are able to buy. If they're able to pay people more money so they can buy bigger houses, which increases the cost of real estate, then you're still winning, right? Because the business is still making money. Like, it all starts with business. It's just a better bet, especially because in investing, my deal is, and this is my principle for anything in life, not really just investing, because you know how we got a lot of fake news, right? Pluto, when me and you were growing up, was a planet. Now it's not. Last 5 years, it was cool to eat carbs. Now it's not, right? And that stuff changes. I like to say, hey, let me go back 1,000 years ago or 500 years ago and see what was truth before profits and stuff was involved. And if I can find truth back in the day, then I could know what truth is today. And so truth a long time ago was business is what you want to own.
So I guess at that point, it's a matter of just figuring out the best businesses to invest in.
So that's the case if you're going to make investing if you're going to be a private equity investor or angel investor, like if it's your 50-hour, 80-hour a week deal that you're gifted for and it's your unique ability, then yes. If it's not, for most people who I wrote the book for like just planning for the future, then don't try to pick the business that's going to win. Just bet on global stocks, right? Basically, try to own as many stocks as you can around the world, so that you know that the basic bet that you're making is, I think that humanity will continue to innovate and our companies will continue to be worth more over the long term, like they have since the beginning of businesses, right? And so you just diversify. And in the book, I talk about the Vanguard study that shows that over the long term, businesses or stocks have earned on average 10% a year over the long term, which is a decent enough return for most people to put away enough money to retire comfortably. So you don't need to guess the businesses. You can just say, hey, diversification, spread my money out. I'm not taking any big bets because I don't know, but it doesn't stop me from making money over time. So then once you do that, you say, all right, if I own 5,000 companies, 6,000 companies, 3,000 companies around the world, the only way my money goes to zero is if all of them go to zero. And the only scenario that I can think of where that can happen is, we nuke the world, and if that were to happen, then your money wasn't safe in the bank anyway. So then it doesn't really matter. So it's not that it can't happen. It's just that's the safest way to invest your money over the long term that will keep pace with the cost of living. So that's why I like it for most people.
Yeah. So I guess it would make sense to invest in maybe not necessarily indexes.
Yeah, I like index funds. I like exchange traded funds, ETFs, which are exchange traded index funds. They're a bit more liquid. But no, I like those too. I don't like mutual funds. They're kind of expensive. You pay more because the mutual fund manager, quote unquote, is going to pick the better stocks than the index, which mathematically doesn't happen, or the probability of it happening is low. Of you picking the manager that's going to do it for the year.
I got to bring this up because you already mentioned Bitcoin. How do you feel about the cryptocurrencies?
Yeah, you know what, man? I think forever, in the 70s, you had the gold bugs, people who love gold because the dollar was going down, and you had it run up a good chunk of the 70s. And, you look back over time and gold hasn't grown much over the long term above inflation, which makes sense. And so Bitcoin is a new thing for the techies, right? Think of it in the mindset of the millennials love tech. Their quote unquote gold or their protection against the dollar falling is gold, right? There's nothing new under the sun. And so, they're thinking that, I got to own this because if the dollar crashes, then blah, blah, blah. I'm like, you don't have to. You can just own the businesses. Like Facebook's not going anywhere. Apple's not going anywhere. Amazon's not going anywhere. I mean, maybe those companies don't, but I'm talking about collectively, like businesses aren't going anywhere.
No, I agree with you. I was saying Apple crushed it.
Yeah, Apple's slowing a lot though, man. In the last recent years, the ones that I like the most, and full disclosure, I own Facebook stock, so I like Facebook. Google, Google's still real interesting.
Yeah.
Amazon's still real interesting. Microsoft, disclosure, I own some of that too in my own portfolios because of the LinkedIn buy.
Oh yeah.
And it was relatively cheap based on my analysis. So I was like, hey, look, let me hold some of this and just see what they're gonna do with LinkedIn, and because I advertise a lot for my business, and they're trying to do what Facebook. They're trying to be the business to business Facebook, which if they can pull it off, is interesting. Yeah. But again, I do my disclosure. I'm not recommending any of those stocks.
That's just what you do. Yeah.
Yeah. But going back to the Bitcoin, yeah. So and it's new, right? I don't like investing things that's new. I call it the railroad principle. Whenever you look at any new industry, whether it was the railroads or gold mining or technology stocks in late 90s, you can go back in history and look at all new tech, and it's always a bad idea to invest in it when it's new because you don't have a clear defined winner, and you're just guessing, right? So you can always wait. Like you can wait. Like Amazon was at Amazon was, I don't know, I think it was like around 699 or something like that, and it dropped, and you could have bought Amazon for a great deal. 2002, 3, 4. Yeah, heck, even now it's a good deal in my opinion. But you didn't have to buy it in 99 because it wasn't a proven winner yet, and you could have just waited because everything was so new. .coms were new. Just wait, be patient.
Yeah, I remember in the early 2000s, I invested in XM satellite radio at $2.67, and that thing shot up to $10. And then I sold, right? Then after Howard Stern signed on, it shot to $20. And I was like, oh, let me throw some more money at this. And then it dropped back down. So I ended up like breaking even. That's just how it is sometimes.
Yep. That's how it is sometimes. Yep.
So getting back to to your book, the third part talks about why most investors underperform their own investments. What exactly does that mean?
Yeah, so I'll relate it to sales, right? So people who've been in sales or have a business, right? You fundamentally know that if you want to make money in sales, all you got to do is just make the calls, right? Like I haven't talked to anybody in sales where I was like, hey, if I remove your inhibitions and you just spent 10 hours a day knocking on doors and making phone calls, and you did that for 3 years every single day, you'll be successful, right?
Mm-hmm.
The problem is they don't do that. They let their emotions get the best of them. They let their emotions stop them from making the calls. Their feelings get hurt. They don't make they don't do it.
Yeah.
And so same with investing. Investing, if you go through the book and you understand the false beliefs you have, and then you put the investment process you have, like literally somebody can right now go buy the Vanguard Global Stock Index, right? It's single fund solution, simple. They buy it, they hold it, and they leave it alone for the next 30, 40 years. I believe they will outperform just about 75% of the investors out there by just doing that.
Mm-hmm.
However, they would, if based on history, have to sit through multiple 30 to 50% drops, every few years or so along the path without bailing. They would also have to not get caught up in the crazes like, Bitcoin or gold or oil or biotech or whatever. Now it's about to be marijuana stocks. They would have to just sit and be boring, right? Whenever their friends are at the party, talking about, Bitcoin or whatever sexy to talk about, or biotech, their penny stocks or whatever, they'll be like, hey, what do you own? Oh man, I just own one fund that's well diversified and I'm just not doing anything.
Yeah.
That's not fun. So so nobody does that. People, they want the sexy stuff. They want the new stuff. And then when the market crashes, they want to be in cash, which is the exact opposite of what you should be doing. And so that's how they underperform their own investments. They set up a good portfolio, and then they do stupid things like invest in Bitcoin or bail out in 2008 or 9. And that's the real value of an advisor, right? It's kind of like a personal trainer. Personal trainer's not telling you anything you don't know. Like you can Google a good workout plan and Google a good diet plan, but the personal trainer is just going to be there for accountability to say, hey, show up. You're not going to want to do it. I'm going to push you to do it. I'm going to push you further than what you want to do, and just keep showing up, and I'll help you get where you need to be. Same thing with the advisor is what I do is commoditized as far as managing the portfolio. Like I said, you can just not use me and buy one fund with Vanguard, and I believe you'd hit your goals. Maybe you might do it when $500 a month is at stake, but when it's $500,000 and a recession takes that 500 temporarily down to 300, like you're gonna need an advisor, because what Mike Tyson say? Everybody got a plan until you get punched in the face. Everybody's cool with risk until you see 50 grand evaporate from your account over a couple of months.
Yeah, definitely. So if people want to invest with you, how do they get in touch with you?
You know what, man? The best way is my website, www.stonehillwm, like wealth management, stonehillwm.com. But they can Google me, Phillip Washington Jr. on Facebook, or look me up at Ask Phillip on Instagram, or find out my podcast. I put all my contact information there as well, and just reach out. I also have a Google cell phone number that I have where people can text me or call me at 469-608-1457. But I'm trying to be everywhere.
I hear you, man. And once again, the podcast is #Ask Phillip.
Yes, sir.
Right on, right on. Well, man, it was great talking to you. This was really informative. And with that, we're going to wrap up another episode. Thanks again to Phillip Washington. Once again, his podcast is #AskPhillip. And if you're even remotely thinking about investing, give him a call. He definitely knows the stuff. If you have a question or comment about this episode or any, or you know an author who you think would be a good fit for the show, let me know. Connect with me on social media. I'm on Facebook, YouTube, or email me at info@ch1podcast.com. Check out our website at ch1podcast.com, where there you can listen to previous episodes and hopefully find your next favorite author. Subscribe to us on iTunes, Google Play, Stitcher, SoundCloud, Overcast, basically wherever podcasts can be downloaded. But don't forget to leave a review, and most importantly, Tell everyone you know about the show. And here's a new thing. We have a Patreon page now. Yes, that is correct. If you think this episode is worth $1, we would certainly like to have that dollar. Look to CH1 Podcast on Patreon. All right, that's it for me. You all stay awesome. Till next time.